This is the ancient Roman city of Kaunas. To attract more merchants to the city, they devised a very clever tactic. Something that you wouldn't really expect in the ancient world. Tax incentives. Cargo brought through Kaunas paid no import taxes, and thus the city prospered for a while. Kaunas wasn't the first place to offer low tax rates to attract foreign wealth, and it definitely wasn't the last. Because today, roughly $8.7 trillion is held in offshore accounts in tax havens across the globe. But what are tax havens? How do they work? And how do they mess with the global economy and regular people's wallets? Well, let's find out. Since the leak and subsequent complete disregard of the Panama Papers, the concept of tax havens have been thrust into the limelight. So what exactly is a tax haven? A tax haven is a place that offers little or no taxation to people and businesses so they can avoid taxes in their home country. They are also highly secretive so that foreign tax authorities can't find out who has wealth stored there. Today there are at least 55 tax havens across the globe. And according to Gabrielle Zucman, in 2018, the top tax havens were Ireland, Caribbean islands such as the Cayman Islands and the British Virgin Islands, Singapore, Switzerland, the Netherlands, Luxembourg, Puerto Rico, Hong Kong, and Bermuda. How do they work and how do companies avoid trillions in taxes with them? Well, let's use a hypothetical to explain just one way they can do it. Let's say a fictional CEO called Jimmy wants to avoid paying billions in taxes on the profits of his company and food and stuff. First, he would create an anonymous shell company, which is a company that exists only on paper in somewhere like the Cayman Islands or Bermuda. Taxes in these places are 0% or near that, and the identity of the company's owner is secret. He then opens an account in Switzerland under the name of that shell company. Food and Stuff then pays that shell company for fictional services like the purchase of patents or some consulting. Payment is then sent to the account in Switzerland. And now, the taxable profits on Food and Stuff in the US plummet because of all that expensive consulting, while the company in the Caymans technically makes millions and pays no taxes, and all the money is in the Swiss account that can now earn Jimmy more money through investing or simply earning interest. When Food and Stuff needs money, it can just take out a loan from that company in the Caymans. So money Jimmy made in Tokyo or New York is subject to taxes in the Caymans and stored in some account in Switzerland. Google uses a more advanced version of this strategy. And in 2015, $15.5 billion in profits made their way to Google Ireland Holdings in Bermuda, where it was taxed at 0%. Other companies taking advantage of tax havens are Apple, who have $246 billion offshore. They use Ireland as a tax haven. They would have owed the US government $76.7 billion in taxes, which is enough to end world hunger for a year, while also leaving you enough change to buy over 100,000 average US homes. Another is Nike, which holds $12.2 billion offshore and uses Bermuda as a tax haven. They should have, but didn't, pay $4.1 billion in taxes. The 50 biggest US companies, which earn over $4 trillion a year, hoard approximately $1.6 trillion of that offshore. These include Microsoft, IBM, General Electric, ExxonMobil, Chevron, and Walmart. $1 trillion divided by 300 million Americans comes out to about $3,333 each. And this avoidance affects pretty much everyone. In 2014, global household financial wealth was about $95.5 trillion. And in his book, The Hidden Wealth of Nations, Gabrielle Zucman estimates that $7.6 trillion of that 2014 wealth was just held offshore. That was about 8% of the world's wealth. In 2017, it had risen to $8.7 trillion. With that $8.7 trillion, you could pay off the entire national debt of Italy, France, and Germany, but not the UK. Sorry, UK. You almost got it though. Greece's famous debt, which is about $370 billion, is less than 5% of that number. And Zucman's estimate doesn't take into account non-financial wealth. There are countless yachts registered in the Cayman Islands, priceless art and gold hidden away in Singapore and Luxembourg, and real estate in London and New York is just gobbled up by shell companies in the British Virgin Islands. This could easily drive that 8% figure up to about 12% or more. And the rapid rise of wealth stored offshore slashes government tax revenue. Zuckman estimates that governments around the world lose about $170 billion annually, enough to give every single person in China about $130. 170 billion is about 1% of all the total revenues raised by governments worldwide, according to Zuckman. Now, 1% isn't really a shocking figure. It's literally next to nothing. But that's the global average. Some places are hit much harder than others. Europe pays the highest price, with about 2.5 trillion or 11% of its total wealth, and loses about 60 billion in taxes each year, more than the GDP of all these European countries. But developing countries lose the most relatively. Their wealth held abroad ranges from 27% in Latin America to 44% in Africa and up to 54% in Russia. This tax avoidance is stealing from developing nations that desperately need those taxes. A result of this is that the infrastructure, education, healthcare, sanitation, and public works that those countries should actually be able to afford aren't built. And this evasion only benefits the wealthiest. Look at this graph, for example. In Norway, Sweden, and Denmark, about 3% of all personal taxes are avoided. But among those with more than $40 million in assets, the top 0.01%, about 30% of taxes are. And Scandinavians reportedly are less likely to avoid taxes than other places. In the United States, offshore evasion costs about $32 billion annually, which is 1.8 times the annual budget of NASA. Tackling tax evasion would reduce the burden on the vast majority of taxpayers not rich enough to hide their money. Countries like Greece wouldn't have to impose as much austerity if the ultra-rich there just paid the taxes they owe. Tax evasion by the ultra-rich and large corporations is actually preventable, but it requires a global effort. Gabriel Zuckman suggests penalizing tax havens and creating a global financial register. The register will record all financial investments circulating around the world, so that tax authorities could check with banks and correctly tax their citizens and businesses. The OECD developed the Common Reporting Standard in 2014, which is an automatic exchange of information between bank accounts and tax authorities that requires banks to report accurate information on foreign accounts. Its purpose is to combat tax evasion, and so far, 97 countries have signed up, with more countries intending to sign later. While not perfect, and having received criticism for ignoring developing nations and for its many loopholes, it is still a step in the right direction. And along with this, in December 2017, the European Union published its first ever blacklist of tax havens. Blacklisted countries face sanctions from the EU, and currently those blacklisted countries are American Samoa, Guam, Samoa, Trinidad and Tobago, and the US Virgin Islands. And you may notice that most of the countries on that list aren't the major tax havens that we've discussed in this video, which is a shame, because in reality, the EU will need to tackle its own tax havens first. Guam isn't really a concern when the Netherlands, Malta, Ireland, and Luxembourg are much larger tax havens located within Europe. With pressure being mounted on havens, with a global financial register, and with countries openly sharing information with each other, a new way of fairly taxing the ultra-rich and multinational corporations can be achieved, and the bleeding of taxable wealth can be stopped. And it can be done easily, because in the end, tax havens only benefit a select few. The majority of people in Ireland or Luxembourg have nothing to gain from aiding bankers and billionaires avoid their tax obligations. The economy of Switzerland would still be extremely powerful, even if all the offshore wealth just disappeared. Tax evasion earns Switzerland much less than it hurts the rest of the world. If those with less are willing to pay the taxes they owe, then surely those with the most should at least do the bare minimum and cooperate with the society that made them rich. I hope you enjoyed this video. You can find all the sources used in the description, and if you like this content, please subscribe. If you're interested in supporting the channel, there are links to the t-shirt store and for Patreon in the description. Thanks a lot for watching, and have a nice day.